Are you looking to boost your credit score quickly? Whether you want to qualify for a loan, get better interest rates, or simply improve your financial health, having a good credit score is essential. In this video, we'll break down practical steps you can take to improve your credit score fast. Make sure to watch the complete video so you don't miss the bonus tips. First, let's understand what a credit score is and why it's important. Your credit score is a 3-digit number that lenders use to assess your credit worthiness. The most commonly used score is the FICO score, which ranges from 300 to 850. The higher your score, the better. Your credit score is determined by several factors. Number 1, payment history, 35%. Your track record of paying bills on time. Number 2, amounts owed, 30%. The total amount of debt you owe. Number 3, length of credit history, 15%. How long you've been using credit. Number 4, credit mix, 10%. The variety of credit types you have, e.g. credit cards, mortgages, loans. Number 5, new credit, 10%. Recent applications for new credit. Understanding these components will help you target areas for improvement. Step 1. Check your credit report. The first step to improving your credit score is to check your credit report. You can get a free copy of your credit report from each of the 3 major credit bureaus, Equifax, Experian, and TransUnion, once a year at annualcreditreport.com. Carefully review your credit report for any errors or inaccuracies. Common mistakes include incorrect personal information, accounts that don't belong to you, and inaccurate account statuses. Dispute any errors you find with the credit bureau. Correcting these mistakes can quickly improve your credit score. Step 2. Pay your bills on time. Your payment history is the most significant factor affecting your credit score. Paying your bills on time is crucial. If you have missed payments, get current and stay current. Setting up automatic payments or reminders can help ensure you never miss a due date. If you're struggling to make payments, contact your creditors to discuss your options. They may offer hardship programs or alternative payment arrangements. Step 3. Reduce your credit card balances. The amount of debt you owe is the second most important factor in your credit score. Reducing your credit card balances can have a significant impact. Aim to keep your credit utilization ratio, the percentage of your available credit you're using, below 30%. Ideally, keep it below 10% for the best results. Paying down high balances on credit cards and avoiding new debt can help improve your score. If possible, make multiple payments throughout the month to keep your balance low. Step 4. Avoid opening new credit accounts. While it may be tempting to open new credit accounts to increase your available credit, doing so can negatively impact your credit score in the short term. Each new application for credit results in a hard inquiry on your credit report, which can lower your score. Focus on managing your existing credit responsibly rather than opening new accounts. If you need to open a new account, do so sparingly and only when necessary. Step 5. Become an authorized user. If you have a family member or friend with a good credit history, ask if you can become an authorized user on their credit card. As an authorized user, their positive payment history and low credit utilization can boost your credit score. Make sure the credit card issuer reports authorized user activity to the credit bureaus. Not all issuers do, so it's essential to confirm this beforehand. Step 6. Use a secured credit card. If your credit score is low, or you don't have much of a credit history, consider using a secured credit card. A secured card requires a cash deposit that serves as your credit limit. By using the card responsibly and making on-time payments, you can build or rebuild your credit. Choose a secured card that reports to all 3 major credit bureaus and has minimal fees. Over time, your responsible use of the secured card can help you qualify for an unsecured card. Step 7. Keep old accounts open. The length of your credit history accounts for 15% of your credit score. Closing old accounts can shorten your credit history and negatively impact your score. Keep old accounts open, even if you don't use them regularly. If you have a credit card you don't use, consider making small purchases on it periodically and paying off the balance in full. This keeps the account active and helps maintain a longer credit history. Step 8. Diversify your credit mix. Having a mix of different types of credit, such as credit cards, mortgages, and auto loans, can positively impact your credit score. If you only have one type of credit, consider diversifying your credit mix. However, don't take on new debt just for the sake of diversification. Only take on new credit if it makes sense for your financial situation and you can manage it responsibly. Step 9. Dispute negative items. If you find negative items on your credit report that are accurate but unfairly reported, you can dispute them. For example, if a debt was sold to a collection agency and it's listed twice, you can dispute the duplicate entry. Provide supporting documentation and be persistent. Removing negative items can take time, but it's worth the effort to improve your credit score. Step 10. Monitor your progress. Improving your credit score is a gradual process, but monitoring your progress can help you stay on track. Use free credit monitoring services to keep an eye on your score and receive alerts for any significant changes. Regularly reviewing your credit report and score will help you identify areas for improvement and celebrate your progress. Bonus tips for sustained credit health. 1. Limit hard inquiries. While soft inquiries don't affect your credit score, hard inquiries do. Try to limit hard inquiries by only applying for credit when necessary. 2. Set up payment alerts. Many banks and credit card issuers offer payment alerts via email or text message. These reminders can help ensure you never miss a payment. 3. Build an emergency fund. Having a financial cushion can prevent you from falling behind on payments during unexpected events. Aim to save at least 3 to 6 months' worth of expenses. Improving your credit score fast is possible with dedication and the right strategies. By checking your credit report for errors, paying your bills on time, reducing your credit card balances, and avoiding unnecessary new credit, you can see significant improvements in your score. Remember, your credit score is an essential part of your financial health. A higher score can lead to better loan terms, lower interest rates, and greater financial opportunities. Take action today to boost your credit score and pave the way for a brighter financial future. If you found this video helpful, please give it a thumbs up, subscribe to our channel, and hit the notification bell so you won't miss our upcoming tips and strategies for achieving financial freedom. Thanks for watching. And remember, your credit score is in your hands. Make the right moves and see the difference.